Hello traders, Cousin Bidding coming to you from theclosingprint.com, October the 11th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, led by small caps and transports. We did see the London Stock Exchange and the FTSE a little bit lower, while the Asian markets, Nikkei, Hang Seng, moved higher. Bombay Stock Exchange was higher as well. Big cap tech stocks outperformed, with the Nasdaq Composite moving higher by 1.4%, up for the week over 4.18%. The bond stock ratio and junk bonds and high yield corporate debt are higher. For the week, we saw the Dow Composite and the S&P 1500 turn to bullish, and the XII is bullish above its 50-day and rising. Tick and Tick-Q moved higher last week as well. We have bullish signals there. NIMO and NAMO bullish cycles continue. While we did see the breadth thrusts a bit extended over the plus 30% level, those could come back in a little bit. The S&P Equal Weight Index is potentially at a triple top, with the CCI signal a bit red. That said, the New York Stock Exchange advanced decline continues to move higher as advancers beat out decliners handily last week, and the new highs, new lows, new highs beating out and remaining bullish for the week ahead. Altogether, we have 13 bullish signals, 6 neutral signals, and 1 bearish signal going into the week. Heat maps are improving for the S&P 500 sectors, with the XLY-XLP ratio bullish going into the week. Strength in small caps, semiconductors, and healthcare providers continue, along with transports, which tend to lead with the small caps when the markets are starting to expand and break out. International markets also improved, while the US dollar was lower and bonds remain range-bound. We'll look at some Ibd50 names. Note there's quite a few stocks that are extended but do look good for day trades going into the week. We'll also look at some MarketSmith Growth 250 that are showing relative strength in white and stocks that funds are buying in green. The Dow Industrials, we see quite a few that look pretty good going into the week, with Disney and Microsoft my favorite setups for the week ahead. Finally, we see Bukowski with 5 of 5 green, with a CPI signal green since September the 25th. It's currently at 70.3%. It was up above 98% last week. It's still bullish with 19 bearish patterns, 45 bullish patterns, and 161 patterns waiting for breakout. Bottom line, we're bullish. The markets are trending. Into OPEX this week, we have gamma resistance at 3,500 and support at 3,400. Remember, transports and small caps are leading, so that's a good sign for the bulls going into this week. Starting off with the spiders, during the week we were looking for price action to move above the 50-day moving average. We got that pulling back on Tuesday and then following through the remainder of the week. We did break above a key level that we were watching last week, where we placed our Fibonacci levels, this pivot low up to this pivot high, this red candle, while a breakout gives us a 1618 extension back up to all-time highs. We did see RSI back above 50, and volume was below the 2 distribution days we saw the previous week, but MACD is above its signal line and rising, and stochastics continues to move higher. This is just showing you that this could be embedded this week. That's just telling you the strength of the trend is noteworthy. That said, the Nasdaq 100 finally gave us our follow-through breakout, moving back above the shooting star on the weekly that we saw the previous week. Last week we moved above that level and appear to be heading higher, with RSI suggesting we could see the all-time highs very quickly. Volume was decent, and MACD is turning, headed back above its signal line most likely this week. As far as small caps are concerned, last week we saw that bullish engulfing candle that pushed above the 21-day moving average. We were looking for a breakout in the IWM. We got that on Monday and a follow through for the rest of the week, closing at recent highs with RSI rising, MACD above its signal line, and volume increasing. What was impressive and also noteworthy last week is the transports. When the economy starts improving, transports tend to lead along with small caps. We did get a breakout to new highs on the transports in addition to IWM breaking out as well. So we're looking for the S&P 500 to see better things in the short term. Several weeks ago, we also mentioned the AAII bull-bear ratio. The American Association of Individual Investors ratio continues to turn and point to higher levels. Every time we've seen this turn in the past, like back in 2009, 2011, and 2016, we saw the markets continue to rally. So looking for this to turn back up, as there are still a lot of people that are out of the market, so that fear of missing out crowd, FOMO crowd, could pile in and help price action move higher as transports and small caps lead us to higher levels. We also noted that NIMO and NAMO for the New York Stock Exchange McClellan oscillator, that breadth was improving. We're looking for this black line to move back above the zero line. We can see in the past when that's happened, we've had rallies that lasted for many months back in 2019, most recently, and of course in 2020, we continue to see improvement with NIMO heading higher after dipping below minus 102 2 weeks ago. The rally continues as more stocks are participating and breadth is improving. We also saw this improvement in the New York Stock Exchange highs minus new lows point to higher levels and more new highs than new lows. New York Stock Exchange advanced decline made a new high as advancers beat out decliners. So we saw the New York Stock Exchange testing this level last week at 13,250. We're looking for a breakout. So we're looking for a breakout going into the seasonally strongest months of the year. We have a green signal on VIX. When this is green, we look for higher highs and higher lows. So this tells us to look for that 3,500 level being tested this week going into options expiration for the month of October. Bonds moved lower last week for the most part. Yields moved higher. As a result, we saw the bond stock ratio between the 10-year and the S&P 500 moving lower. That's bullish for equities, as equities are favored over bonds when this ratio drops. While yields on the 10-year moved higher, that's bullish for equities as well. While the short duration and long duration bonds all moved lower for the most part. TLT still remains in a range with RSI at 50. We did see a little bit of buying last week on this particular chart. We are looking for this range to continue unless yields do break out and follow through again this week. We did have the high yield corporate bond ETF moving higher, breaking out. We told you that if this pushed off the 65 period moving average, which we never tested, we came close to it, reversed 3 weeks ago, followed through 2 weeks ago, and then broke out last week. This is bullish for equities as this rises, looking for RSI to lead the way. Stochastics is turning with high yield corporate and junk bonds both moving higher, lending a risk-on appetite to the market, in addition to what we saw in IWM, together with biotech giving us a risk-on indicator telling us to look forward to better things to come in the weeks ahead. Currency pairs did manage a move higher. This is putting a headwind on the UK markets, the London Stock Exchange and the FTSE, as the British pound outperforms the dollar, moving back above the 21-day. RSI is rising, while the US dollar moved back below its 50-day moving average. Still has a potential of a rounding bottom and a higher low. So we'll look for that this week. RSI is pointing to a fade in the week ahead. If the dollar remains weak, expect commodities like copper to continue higher, pushing back above this base that it knocked out over the last 12 weeks. This is bullish for construction-related names, builders, home improvement going into the end of the year and the presidential election. We saw back in 2009, right before the reversal in March of 2009, about 4 months before that period, copper took off to the upside, giving us a leading economic indicator forecasting better things to come. We also saw that towards the end of the year in 2016 when the markets took off after the recent presidential election in 2016. Now we're starting to rally into November, looking for better things to come as copper leads the way. Gold is also trying to return to the 50-day moving average. We almost tested it last week. We have volume by price resistance just overhead. RSI is trying to move above 50. So look for a break higher in gold. Also keep an eye on Ibd50 stocks, Franco-Nevada, and Kirkland Lake. Both of those look pretty bullish going into the week. We have MACD back above its signal line, and volume is starting to pick up as of Friday. Look for a test of the 50-day this week. Finally, if you're bullish equities, you want to see crude oil moving higher. It has a positive correlation to equity markets. We're in a sideways range for the last 5 weeks, looking for a break above that $42 a barrel mark, and then potentially a rise into the 50s and 60s if we can get back above this resistance level this week. The sector heat map, read from left to right each week, is updated on Friday. We can see that we have a market improvement from crimson reds to oranges and finally to lime greens and yellows this past week. That's telling us to look for better things to come. Outperformance in financial services, also in semiconductors last week, and healthcare providers. Most sectors look very strong. International markets also improved, with Mexico outperforming, the Asian markets picking up a little bit, while we saw some weakness in Russia and Turkey. Whenever we see downturns or flattening in this index, it tells us to start to position more cautiously. Therefore, this chart is bullish for equities going into the seasonally strongest months of the year. As we mentioned in the opening monologue and during the beginning of this particular video, transports outperformed. We saw small caps outperforming as well. These breakouts are telling us to look for better things in the seasonally strongest months of the year, October, November, and December. We're looking for a continuation with the banks reporting this week. Industrials were improving as well. Those broke out to new highs, with the exception of energy. Here are the Ibd50 stocks for the week ahead. Many of these are overbought with RSI pegged above 70 and stochastics embedded at the highs. So we're watching how some of these trade out this week. The majority of them would probably be very good day trades, but I'm very skeptical of taking stocks that are trading so overbought at first glance. So we're watching how these stocks like ENTG continue higher, looking for a retracement in most cases back to the 9 EMA for a better setup. It does show strength of trend with RSI muscle, and volume indicates that institutions have been the one picking up shares, but it's that stochastic and RSI that give me the sense that we could see a little pullback in some of these names this week. So just be aware of it. Adobe was looking really good. It's close to the 21-day, looking for a follow-through. You can see in this particular case, this is one of the better setups. You have RSI just moving off the 50 zone. Price action is near the 9 and 21 day. The 50 day is just below. Volume by prices back down below where we were. Volume by prices back where we consolidated 2 weeks ago, looking for a follow-through as RSI, looking for a follow-through as volume increases, MACD moves above its signal line, and stochastic is rising. So look for Adobe to test these highs at around 505.50, and then if it can get through that level, 536.88. Remembering that this week we're starting earnings on Tuesday with Bank of America and Citigroup reporting, followed by all of the big banks, Goldman Sachs, JP Morgan, Morgan Stanley, and FNC and PNC this week. So with that in mind, we'll probably be taking, we're expecting lower volume going into, we're looking for lower volume going into earnings this week. Cadence Design, CDNS, is another one that just moved through the 9 and 21 day back above the 50 day on Wednesday, followed through Thursday, Friday. Moving above this volume by price zone, telling us that RSI leading the way, telling us that price action will most likely test the 52-week highs in the short term. Volume was increasing. We saw 2 weeks ago that institutions were picking up shares. MACD turned back up and moved above its signal line, and stochastic moved off of oversold. This is my favorite setup. Unfortunately, we are back up here at overbought. We could stay embedded as it just tells us that the strength of trend continues. So we'll look for a follow-through in CDS this week. Chegg is beginning to rally as well. We've got a 21-day, 50-day cross this week. We saw the 9 EMA cross up through the 50-day last week. RSI is above 50 and rising. Most likely, a return to online education is going to impact this purveyor of online texts and printed materials for elementary through high school and college-bound students, and college students as well. We're also looking for stocks like Dynatrace to move above volume by price. RSI is rising. We're just moving away from the 9 and 21 day. I like these types of setup. We saw that with Microsoft last week, breaking above recent pivots, looking for a follow-through as volume increases. That's telling us that institutions are picking up shares. MACD is rising and stochastic is above 80. Microsoft gave us the same look, moving above this pivot at 214 last week. We were looking for an expansion day. We got it. RSI is rising, moving above this volume by price band. Moving above this volume by price band would suggest, with RSI rising, that we could test 52-week highs going into earnings. Volume increasing, showing us that institutions are picking up shares. MACD is above its signal line, and stochastics turn back up Monday and Tuesday as we followed through into the end of the week. While not my favorite setup, we did see gold stocks, Franco-Nevada and Kirkland Lake moving higher. Moving through the 21 day, if gold does strengthen, the US dollar fades a bit more and perhaps creates a double bottom, we could see a breakout on FNB and Kirkland Lake this week, with Kirkland Lake gold looking a bit better than Franco-Nevada. Right at the 50-day moving average on Friday, RSI is rising. Look for a breakout and a move through 52, perhaps through 55 this week. Volume increasing, MACD's turning and crossing, and stochastics is closer to oversold, leading to a potential follow-through this week. LRCX is on the Ibd50 again. We took this one as it moved above the 9 and 21 day a few weeks ago. Looking for follow-through. We blasted through the 50-day on Tuesday, got rejected, and then followed through Wednesday, Thursday, Friday. Testing this pivot high going into earnings. We have 52-week highs overhead, and RSI suggests that we could test those levels in the short term. As volume increases, MACD is above its signal line, and stochastics is embedded. Some of the stocks that are following through from the Ibd50 funds buying list: Some of the stocks that are following through showing up on the list that IBD puts together. Funds are buying AS. In addition, if we look at stocks that funds are buying from IBD, we did see Air Transport Group moving higher. Remember, transports are outperforming, so we could see a follow through this week as funds pick up this particular stock. Looking for a follow through, volume picking up, MACD's above its signal line, and stochastics is embedded. Audio codes also looks like a good setup, pushing above the 50-day, consolidating above the 21-day, which will probably cross this week. RSI is rising. This showed up also on the stocks that funds are buying list. Looking for a follow through, MACD above its signal line, and stochastics embedded. CALX, fairly inexpensive name. This one shows up on the stocks that funds are buying. Needs to make it through this volume by price band, resistance level, but RSI suggests that we could do that this week. Volume picking up, MACD's above its signal line, and stochastics is above 80 and rising, indicating strength of trend. Domo, also a nice looking setup. Flat base, looks like it's going to break out, moving above this pivot on Friday. RSI is rising, suggesting higher levels. MACD's above the signal line, and stochastics is rising. DraftKings saw a little bit of distribution last week, it looks like, as it moved from that 60 level back down through 50. Volume increased. Now that we have stochastics oversold again, approaching oversold again, we could get a turn up like we did in these two occasions that led to higher prices. So we'll keep an eye on a potential test of the 50-day over the next several days. We have a volume by price support level right in that zone. We also traded Fastly last week. We were looking for a move through 100. A close above gave us a green light. That took off to the upside, moving from 100 very quickly up to nearly 130 last week for a nice 30-point move off of that Monday-Tuesday breakout zone. Moving quickly off of the 9 EMA on Tuesday. While volume indicated institutions continue to like this stock on the breakout. Fiverr also trending, volume increasing, showing institutions are picking up shares, MACD above its signal line and rising. GRWG continues to be interesting to institutions that keep picking up shares. We're looking for a breakout this week. MACD above its signal line and rising, stochastics moving higher. Looking for a retest of recent highs in the next several weeks. GSX with a breakout last week above that 109 level. Looking for a follow through and a test of 141.78 over the next couple of weeks. INOV, another stock being picked up by institutions, fairly inexpensive name. Looks like it's going to continue trending along its rising and bullish. Looks like it's going to continue to rise above its 9 and 21-day moving average. The 50 days just below. All three are inclining and bullish. RSI is rising, moving above these volume by price bands into an area of no overhead supply as MACD stays above its signal line and stochastics is embedded. Also looking for Lake to break higher this week. RSI is rising. Volume was increasing last week. And stocks like SPT, Sprout Social, that more than likely we could day trade if these continue higher, pulling away from the breakout zone. The 9 and 21-day rising pretty quickly, showing RSI muscle as the stock continues higher on above average volume. Do make sure you check out the opening monologue. There's a lot of stocks on here that look very strong. Also check out the Dow Industrials. Disney in particular and Microsoft look like they're going to follow through this week. We did see Visa and Verizon along with Walmart breaking higher. All three of those look like they're going to continue this week as the Dow Industrials continue to outperform. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, October the 11th, 2020. with your weekend video newsletter. Look for the watch list to come out later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Otherwise, have a great weekend, what's left of it, and otherwise, I hope this helps. Take care, and we'll talk to you soon.